Good morning, traders. This is Tony D from easyMarkets here in Sydney. TraderTalk for the Friday, the 8th of September 2017. We had the ECB meeting overnight. The euro has finished above 120. Basically, the process of tapering in the ECB has been moving forward just a little bit slower than the market first originally thought. We are seeing the big decisions made in October. They didn't change their GDP forecasts. They didn't really change their inflation forecast too negatively, given that the euro has been rising. They refused to comment on the euro rate as well. So Draghi, when asked explicitly, is the euro too high, refused to comment on it. They actually asked if you know where the euro is as it broke above 120, and he said, no, I don't. And then his assistant gave him the phone and showed him, and then he looked up and says, I don't comment on the euro. Now, sort of a very interesting dynamic there, that it's almost an acceptance that the euro is going high as they do this process. On the other side of the coin, the euro versus the US dollar. So what's the US dollar doing? The US dollar is under pressure across the board. Yields are collapsing. Long-term yields are collapsing. The US 10 years are year lows. They fell 3% last night, so they went down to 2.4% in yield. Now that's a really low yield, and the key level there is 2% coming up. Right? If that level is to break, then you may see US dollar capitulate here, with the downside in dollar yen below 108 if that was to happen. Dollar yen still holding above 108 to begin with, but with the euro on the strong foot, the Aussie on the strong foot, the Kiwi on the strong foot, the pound making highs, the US dollar is getting hit from all angles. And if you look at the US dollar index is at year lows underneath 91.80, clear break last night. And the outlook for the US dollar index now, there's a bit of a gap between where a gulf almost where we can go down to. So let's have a look at the weekly. You can see the 91.80 has been broken last night, and it's nothing but open air here all the way down to 80. So in terms of how's the US dollar going to reverse, and what's driving this US dollar weakness, there was a agreement last night between Trump and the Democrats regarding government debt ceiling. But also there was words released that they're considering removing the debt ceiling altogether. Now this has a really negative effect on long-term potential outcomes for the US credit rating and potential for the Republican power base, because the fiscal conservatives use this when they're arguing in all the political debates, and the fiscal conservatives are all Republican, that they want to become they want to slow down spending. So if you increase spending, you have to decrease it somewhere else. But if that goes out the window, then the fiscal responsibility that US has been known for, it could get worse. And in terms of the breakdown and any sort of issues that could come from this, where you don't have any sort of limit on how much you can spend, could become a bigger issue in the future. And so, just short term anyway, it's not really been passed yet. It's just an idea that's been floated around, but you can understand the potential for that to become very negative. US already owes 20 trillion, and now if they want to, completely remove any limit to how much they spend, then it's like giving a credit card with no limit. All right, now that's the issue there. We've got US dollar in the weak sentiment as it's under pressure even today, right now, as we're speaking. At the open here in Asia, it is at new lows. All right, guys, if you do want to have more, a bigger chat with me about what's going on in the market, or if you want to chat with any of our dealers here, come through on the contact numbers below the YouTube video. Or if you want to join up and have a chat with a dealer or trade with a bit more assistance in day-to-day trading, please look at the link there. Active Traders Group is where you can get access to a dealer. Also learn to trade multiple different trading methods, and get a little bit more assistance, a bit more education. Thanks, guys.